Well, a warm welcome. Today we're diving into the latest investment and economic snapshot for July 2024. Let's get started. Both Australian and US share markets hit all-time highs. Commonwealth Bank is now the largest company in Australia. The Australian trimmed mean CPI came in below forecasts. The MSCI World Small Cap Index rallied by 9.28%. The MSCI World Index gained 4.1% in July, with a notable sector rotation from high-performing growth stocks to small-cap, cyclical and value-oriented companies. In Australia, the ASX All Ordinaries rose 3.84%, reaching highs, while the ASX Small Ordinaries increased 3.49%. Consumer discretionary stocks led by gains such as Wesfarmers were up by 9.8%, and financials up by 6.26% as Commonwealth Bank surpassed BHP in market cap value. In the US, the S&P 500 closed higher by 1.22%, while the Nasdaq dipped 75 basis points. Small caps shone, with the Russell 2000 surging 10.1%. European markets lagged, with the Euro 100 rising just 0.5%. In Asia, Chinese mainland shares rose slightly, while Hong Kong shares fell. The Nikkei dropped 1.2% due to rising interest rates and a stronger yen. However, in August, at the date of recording, the Nikkei has dropped further. Commodity prices have weakened overall, with copper and iron ore down by over 4%. However, gold hit all-time highs, closing $2,445 per ounce, driven by potential US interest rate cuts and geopolitical tensions. Both Australian and US bond markets rallied, with yields declining. The Australian 10-year bond yield fell to 4.13% and the US 10-year dropped to 4.06%. Australian inflation data brought relief, with trimmed mean CPI at 3.9% year-on-year, below the 4% forecast, reducing interest rate hike expectations. Unemployment rate remained unchanged at 4.1%, while retail sales grew by 0.5% month-on-month for June, ahead of expectations. The US economy grew by 2.8% annually, surpassing the 2% forecast. Despite this, labour markets loosened slightly, with unemployment rate ticking up to 4.1%. US inflation continued to trend lower, with headline CPI at 3% year-on-year in June. The Fed kept interest rates unchanged, but a rate cut is expected in September. Biden's withdrawal from the presidential race and Trump's narrow escape from an assassination attempt have led markets to reassess potential global economic implications. China's economy grew by 4.7% year-on-year in Q2, below expectations, while Japan's central bank raised its benchmark interest rate to 0.25%. In the Eurozone, CPI rose by 2.6% year-on-year, and the S&P Global Composite PMI was below expectations at 50.1. Investors are likely to welcome cooling economies and softening labour markets globally and domestically. Combining with moderating inflationary pressures, this could provide further impetus on monetary easing. Company earnings, especially AI-related sectors, will be crucial to support current elevated earnings growth expectations. We anticipate a soft landing scenario, with economies slowing but remaining positive and inflation moderating. This may allow central banks to gradually cut interest rates over the next 12 months. However, as of the date of recording, August is going to prove some interesting insights by the end of the month. Until then, we'll be watching.